Hello, everyone. Welcome to another captivating episode of Keeping It Real by Housing.com. Real estate has taken a tectonic shift recently as large brands and listed players have acceptance beyond their core geographies. The fiscal year 2023-24 perhaps stands out as the defining moment for big brands in India. With strict regulations under RERA, Real Estate Regulatory Authority, only credible players with robust financial and compliance capabilities have thrived, thereby increasing market share and, importantly, trust among buyers. The shift towards branded developers who can assure on-time project delivery and international quality has also been very significant. The need for market research and due diligence, phased development, partnerships and joint ventures, diversified portfolio, organizational structure, operational efficiency, cost management, brand trust, and customer service, you name it. By leveraging these strategies, large developers and brands are better equipped to manage the complexities of expansion into newer territories, capitalizing on growth opportunities while mitigating potential risks. To talk about all of these and much more, we have with us Mr. Uday Viranand, Managing Director, ATS Homecraft, to help us understand the trends and the nuances. Hello and a warm welcome, Mr. Anand. Delighted to have you on the show.
Good afternoon, and thank you for having me.
Let's start off with a very fundamental question, basic but fundamental nonetheless. What factors set large and branded players apart in the real estate market? And if I'm asked, how can buyers, if I'm a buyer, how can I evaluate their brand rankings and market presence to understand the premiums that these developers command? Mr. Anand?
I think that's a great question, first of all, because from the buyer's perspective, I think in the last decade at least, the single most important thing has become trust. Trust, because if you look at the Indian market, the housing market scenario versus maybe, let's say, how housing markets operate in many developed or advanced economies, what's different is that a home buyer will typically come in while the project is still under construction, right? Whereas abroad, whether it is whether it's in the United Kingdom, whether it's in the US and other advanced economies, usually what will have is a small deposit at the time that the project has started, and then most of the payment will be due at the end when possession is happening. So
Absolutely.
from a buyer's perspective, the risk is heavily mitigated. I think especially the last 10 years where we had a lot of stalled projects across the nation, and a large majority of those have been in the NCR and the MMR market. Home buyer today is essentially looking at, is this project going to be completed? And will it be completed within the timelines that have been promised to me? That becomes the single most important factor.
Absolutely.
When making, and that's almost the entry barrier to making that decision. Of course, once you've made that decision, once you've got an idea that, okay, these developers, this is the track record of the developer. I'm coming in, and again, it depends on developer is one, but also the project. You could be coming in when the project is greenfield, so no structure has really been built. It's a new launch. Or you could be coming in when it's a year away from possession. So, of course,
Absolutely.
when a home buyer is looking at it, that risk of delivery, the more time that's gone into the project, that risk reduces. So I'd say these are the two big things that any home buyer would be looking at. And honestly, it's, after a point, it's not about whether it's a branded developer or not. You do have to look at the project. You have to understand how much, if it's a project which is, let's say 4 years, it was launched 4 years ago. One of the things most home buyers would look at is, how much sales has already happened in this project. If there are 1,000 units, am I going to be the 10th buyer in this project? Or will I be, the 800th buyer in that project?
Absolutely.
Because obviously that also speaks to the financial strength of the project. And that's a very important lens to look at when you're going in to purchase your home.
Absolutely. It's interesting because you talk about trust, and it seems that trust is a major driver for large and branded developers, and that is kind of the binding force and also the major attraction which is driving buyers towards branded developers. primarily so because while small developers often face trust deficits due to lack of brand reputation, do you see this trend getting reinforced more as the industry undergoes a reputation reset, Mr. Anand?
So Gauravji, this is a again very interesting question because uh, I don't think you can say that point in time this is how things were and this is how things will be. It's always a very evolving situation, and the reason I say that is because I think it depends on what we call a branded developer. Most people,
Mm.
when they talk about branded developers, they're talking about, and again, different people will have different views on this. Some people will say listed developers are branded developers, and there's a greater trust premium that we place if the developer is listed. Similarly, they some might say a pan India developer is a branded developer. I think all of that, what one really needs to look at is what is the past delivery track record, um, the projects that you are buying into by the developer. How has the project, kept up? How has the upkeep been 5 years after possession? How is the
Mm.
upkeep been 10 years after possession? Because you have to remember that anyone that's buying a home, and I'm assuming that your listeners are largely end users and home buyers that will actually,
Yeah.
they're not largely investors. Uh, but so the main thing is not just okay, the rate this developer commands a 30% premium in the market. So the market's trading at 10,000. I'm going to come in at 13,000, and because they sell very well, I know that by possession it's going to 20,000. I don't think
Right.
many people look at it like that. I think people look at it in the sense, okay, 10 years later, uh, will I start seeing cracks in my walls? you
Mm.
know uh, how is the horticulture downstairs? What is the how is the developer accounted for security in the project? So those are things that people look at, and I think over there track record really matters. What's
Right.
happened in the last 10 years is that when there was a cycle after 2010 when the industry really picked up, this is after the global financial crisis, we
Right.
saw a lot of smaller developers suddenly come up, especially in cities like, and I can possibly speak better for the NCR than I can for other regions in the
Mm.
country. We saw a lot of smaller developers, come up in NCR as well, because in Noida specifically, because it was easier to pick up land in the government allotments, uh,
Yes.
and start a project. So,
Yes.
but very quickly after that, what happened is what the market realized, and these developers also realized that development is not such an easy thing,
Yes.
because you can't acquire the land and then say, okay, I'll outsource construction, I'll outsource sales, I'll outsource design. It
Right.
doesn't really work that way. So
Absolutely.
पिछले 10 साल में क्या हुआ, a lot of the market, what we saw, of course stall projects happened. There have been many stories which are not so nice, where people have still been stuck, but also there have been a lot of resolutions. Now in a lot of those resolutions, especially when the Swami fund came up as well, we saw two categories of developers emerge. There was
Right.
one category of developer who was not able to complete their project,
Mm.
right? And essentially, somebody else had to be brought in to then complete that project, whether it was through
Mm.
NCLT, whether it was bilateral between the lenders and the developer, but somebody else came in to complete those projects.
Right.
And then there was a second category where genuinely the project got stuck because of lack of financing, or because of because of macroeconomic conditions where
Mm.
COVID came up. There were a lot of disruptions because when RERA, GST, everything demonetization happened at the same time. It did cause a shock to the industry. So
Absolutely.
the second category of developers, actually, then over the last 4 5 years, you know, with Swami, with a lot of support from the government, local, both state and center, to actually finish their projects.
Right.
So, to then say, so the way we look at it, or the way that I'd say anyone should look at it, is that a lot of the people that were not in this trade for the long term,
Mm.
they have probably now moved out, because they are not
Mm.
the ones that you're looking at who are launching new projects. The people that are still in the trade today, who had projects 10 years ago, they still have projects today. And they might be small regional players as well. Maybe they've only done 5 projects in the past, but they're
Right.
still there launching projects. So that means they are there for the long run. And I really don't see a reason, why somebody who's in the long run, should not be somebody who cannot be trusted for that reason. Of course, there's a
Absolutely.
lot of due diligence a buyer needs to do, but that's how I would segregate it.
It's interesting because you classify it into categories. So uh, probably that brings me to the next question, and logical next question is, of course, is the real estate market increasingly getting dominated by big brands? To what extent does the success of large, and if I may say so, some listed developers who command significant consumer goodwill actually pose a threat to what can be classified as regional or small developers with limited footprints? What does the evidence suggest, Mr. Anand?
So look, this is again, I'd say, what's this particular phenomenon has only picked up in the last 5 years. I think, the two big, very successful IPOs that have happened. One was Macrotech, then the other was Signature Global. Macrotech
Right.
being Lodha. Before these, I think there was a decade where there were no real estate IPOs. So the fact that today we have listed developers, we have, or rather, we have unlisted developers becoming listed developers, and then having stellar launches, and launching new projects. I think it's a fantastic thing for the market, because what it also does is it shows the, up until now, unfortunately, our industries had a lot of bad media, and bad
Right.
media for the right reasons. Projects got delayed, people didn't get their homes on time. But now you have, the fact that a developer is getting listed means that they have very strong corporate governance, means that they operate with a high degree of transparency. It means that they have a very strong, delivery track record. So when homebuyers or the larger public sees that, okay, from this industry now we have developers that are going down this route, and
Hmm.
it's also a great thing for the smaller regional developers, because it means that, okay, this is an achievable thing. One metric I'll tell you is, I think I forget the exact numbers now, but in the US, the degree of on the stock market, I think listed developers accounted for something like 8 to 10% of the overall stock market capitalization, whereas in our
Right.
country, probably below 1%.
Yeah.
So that's the degree to which, as we move to an advanced economy, you will see more developers going down that highly institutionalized route. Now, the
Right.
second part of your question, about how much of a threat it would be to smaller regional players. Look, I think in cities like Gurgaon, micro markets like Gurgaon, Noida, and other, tier one metro cities, whether it's the NCR, whether it's MMR or Bangalore, uh, large listed developers is definitely the fact that they're doing well. It's a great thing. I don't think it's cannibalizing sales of smaller developers,
Right.
and likewise in tier two cities as well. I don't think it's something that is a negative, because very few developers. There's a lot of width in the Indian market, in the real estate market if you look at it. But अभी वो
Yeah.
depth हमने explore नहीं की है. For
Absolutely.
example, by depth, I mean, uh, there's an over premiumization happening in the market, and we've
Yeah.
seen it in the NCR in the last 2 3 years. Affordable housing, there are very few developers, whether listed or unlisted, branded or unbranded, that are actually making a product which is between 50 lakhs to a crore. There are even
Right.
fewer that are doing under 50 lakhs.
Right.
If we have a population that in the next 20 30 years will be aging as well. There is
Absolutely.
no assisted living infrastructure. So, there
Mm.
are a lot of product types that exist. Student housing was a big thing pre-COVID. And surely, as the new parts of the cities develop, and we have new universities coming up near Devar, for example, where we'll have the largest airport in the country coming up. You will have demand for all kinds of different housing. So there is a lot of width in the market, but I don't think we've explored the depth. And it's real estate is not like the tech world where you have five big players. You
Yeah.
will have players for each segment of the market. You will have different geographies. So I think what is happening is a good thing. It seems like we're moving in the right direction.
Yeah, absolutely, of course. But is the opposite also true, if I may ask you? Just to paraphrase, conversely, do you think regional brands, which are smaller in size, of course, can actually pose a threat to the dominance of big brands? I ask you this question because the market, the Indian real estate market, and given the nature of the country and the society, it's a very vast and diverse, both in terms of demand and requirements, and also the complexities of the market and the status of the market. Is it reasonable to say that regional and national brands will continue to coexist, or if I may cite an example, one example could be the post recent upsurge in demand for luxury living. A lot of regional players have successfully capitalized on the same. So, do you think that it may not be possible, while theoretically it might be possible for the large brands to actually expand nationally? Actually, on ground, it may not be possible, and there's enough space for regional players to coexist. What's your view, Mr. Anand?
I completely agree with what you're saying. And the reason for that being that, look, you're absolutely right. There are a lot of instances where, in the higher demand for luxury living, for example, for luxury
Yeah,
housing, at least I see this in the NCR, small, regional developers who have a real pulse on the market have actually really done much better, perhaps, than some of the larger developers. There is a thing where, at one point, what happens is real estate, one has to realize and remember, as a developer and as a buyer as well, that real estate is a very regional game. It is a very, very regional thing. And more than regional, it's a very neighborhood thing.
yeah,
So, NCR is still quite large, but if you look at Mumbai, in Mumbai, for different neighborhoods, you have different developers. And the thing is, so one also needs to remember that as a smaller developer, uh, let's say you're doing a 5 acre project, and you have, I don't know, I'm just saying numbers here, but you have 300 units that you're making there. Those are larger units. 300 units are not that difficult to sell.
yeah,
If there is a small regional developer that's making it, they will reach out to 10 people in their circle or 20 people in their circle who reach out to another 20 people. So very quickly, they'll be able to sell that project. And we've seen that happen as well. Now, also because it's a regional developer, it's a smaller person, maybe they're doing only one or two projects at that time. They will know exactly who their customers are, and they'll be able to make sure that, their customers have that personalized feeling. So, and
absolutely.
when we did our first project, my father started the company ATS in 1995.
Mm,
And when we did our first project, he knew each and every customer by name,
right.
and he still knows all of them by name. He still meets
Yeah,
them. So I think there's a degree of person. You have to remember, buying a home is a very personal thing, and
absolutely.
at least in India, I think after who you're going to marry, what home you're buying is the second most important decision that you'll ever
Yeah,
make.
absolutely.
So,
Yeah,
sometimes what happens is people actually say, if I go to a large multinational player, I might not get the degree of personal care that
right.
I, would if I go to the guy who lives down the street and who's a developer. But अरे उनको तो हम जानते हैं, उनका number है हमारे पास.
Mm,
So that always plays it is a factor. And I think, for different people, different things are priorities. So there will be people that will gravitate towards the larger brands. There will be people that want a more personalized feel when they're buying their home. So
absolutely.
I think there is a coexistence to answer your question.
Absolutely, completely agree, and a very great insight on personalization and why that space exists. Thank you, Mr. Anand, for taking the time out and dropping by to share your insights and perspectives. That's it from us for this episode. We shall be back again with a fresh episode of Keeping It Real by Housing.com with information and insights on the real estate industry. Whether you are a pro or a beginner, we are here to keep you informed and entertained in the world of Indian real estate. This is Keeping It Real by Housing.com, where we keep it real always. You can catch the episode on Housing.com, on the Housing.com app, on the YouTube channel of Housing.com, on Earshot.in, Spotify.com, Apple Podcasts, Google Podcasts, Ghana.com, and Geo7. Take care and stay safe.